This lesson is about what you can do to prepare to trade each day, what you can do to get ready in the morning, and what you look for before the market opens. So, the first thing I want to do after I get up is shower, eat breakfast. I want to be sharp mentally and physically so that number one, I can make good decisions, and number two, I won't have any interruptions. I don't want to be in the middle of a trade and get hungry and then go to the refrigerator to get something to eat. I want to watch my trades and I don't want any interruptions. So you want to have a good breakfast and be ready to go. You want to be at your computer by 9 a.m. Eastern time, which is 30 minutes before the market opens. And once I get to my computer, I'm going to start to watch the news. I'm going to check for any companies that might be releasing earnings or have already released earnings. I want to check the news to see if the Fed or Federal Reserve is going to do something with interest rates, or is oil prices, are they affecting the markets? What about the stock markets in China and Europe while we were asleep? What did they do? Any political events, basically any news that could affect the whole market, I want to know about. And that will be the main story on any news outlet that you're watching on any major news online, or on CNBC or Bloomberg if you're watching that on the TV. So that's what you want to check in the mornings. I also want to check the trend or direction that the whole market is going. Is it basically up, down, or sideways? Because if the market is trending a certain direction, let's say it's trending up, then again, most stocks are going to follow it up. And what about for the market support and resistance? Where can we expect the trend to start to end? Is it going to stop at support or resistance? Is it going to hesitate? We want to be aware of that because that's going to affect our individual stock trades. But I also want to look at individual stocks, and I want to see the trend for each stock and where support and resistance is for them, because I want to know when that happens. How does the stock act when it hits that point? Does it just blow right through that price, or does it stop and stay there, or does it reverse? That's a key critical point to be aware of. So I'm going to take a lot of notes on a piece of paper that morning I can refer back to during the day. Now, after the open, I'm going to be watching for the first 10 to 15 minutes of trading. I very rarely place trades before the 10 or 15 minutes have passed. Okay, I want to find stocks that are much higher or lower than the rest of the market. Okay, again, most stocks are going to follow the market about the same magnitude. So if the stock market overall is up about 0.3%, in general, you'd expect most stocks to be up about 0.3%. If there are some stocks that are up or down a lot, I want to take a look at those, because those may very well continue in the direction that they're moving. There's obviously something going on. I want to check it out and see if there are good stock setups that are tradable. I'm also going to look for gap ups and gap downs to see if they're the kind of gaps that are going to reverse, or the kind of gaps that might follow through in the direction of the gap. So if it's a gap up, it might keep going up. I may have to check the news to see if there's an earnings report or some other news that have come out on the stock. If there's good news and the stock is up, well, then that's likely to follow through, and that's a gap and go trade. If there's no news and it starts to reverse, I may short it, a gap and reverse trade. So I'm going to check the news first before I trade a gap in most cases. Also, I'm going to be looking for relative strength and weakness. As the market moves, is my stock showing relative strength or weakness compared to the market? That's another clue as to the direction of the trade of the stock from that point on. So these are the things I'm looking for. And once I find a trade, I'm going to watch it. I'm going to see if it looks right. If it does look right, I'm going to look for a low risk entry point. I'm going to make sure risk versus reward is in order so that the reward is at least 2 times the risk. And then I'm going to figure out, where do I want to get out if this trade does not work out right? Where do I want to put my stop loss? And then once I set that price, I write it down and I stick to it. I do not rationalize, okay? When you find yourself rationalizing because the stock keeps going through your stop loss, then you're blowing away your risk versus reward and you're letting your losers go further than they should. Don't be afraid to take a loss. Just do it. Get used to it. Get comfortable with it. Just do it. Stick to your stops. Now, if you're putting your stop loss price at the wrong spot, well, that's something you can fix later. But you need to get into the habit of sticking to your stop loss price. So let's review. You want to be at your computer ready to go about 30 minutes before the market opens at 9 a.m. Eastern Time. You want to check the financial news like Yahoo Finance or MarketWatch.com or CNBC or one of those, just to check for any news that might affect the whole market. Then you want to look for support and resistance and trend for the overall market as well as individual stocks to see what might be happening, to look for opportunities. Then as you do spot opportunities as the market opens, well, then you look for entry points after you find them, and you check your risk versus reward. And if all this is in order and as it should be, then go ahead and place the trade. So go ahead and take the quiz now, and when you're ready, move on to the next lesson.